It's Friday, Friday. Already, Russell 2000 is up 5%. Our man Robert Marson's loving it. There's a lot of action in energy starting off the year. Bob Morrison loving it, and so am I through my Schlumberger. Let's get it going. Who wants to go first? Robert, why don't you lead us off, buddy?
You got it. So I just wanted to mention two stocks briefly because there was big news on both, and I've talked about these in the past. The first one is one of my MLP pipeline, Plains All America, PAA, which I've mentioned in the past, and it's actually had an okay year compared to the other MLPs, being up a little bit and raising its dividend for 10%. So about 3 years ago, I got into this at a $12.25 cost basis. The dividend was, I think, under around a buck run rate, and they had a plan to raise it aggressively until they hit a payout ratio. And I told people, like $1.67 this year, and it's $1.67 up from $1.52, which was up from $1.27 in the last 2 years. So next year, I expect it to be $1.82, and that should be their final 15 to 20 cent year raise. So it's actually dropping the growth rate as the dividend gets so high. But when you have a 12.25 basis and you have a $1.82 dividend, last time I did the math, that's 14 to 15% cash on cash. So I'm not unhappy with pocketing 15% a year cash on cash on my business. It's kind of went up 50%, did that a couple years ago, and has been treading sideways since. But again, it's very hard. It's an $18 stock. So on next year's number, this time next year, it'll be a 10% yield. And I think a 10% yield is stupid. And when I've always, people have asked me, when do you get paid in these things? And I've always said when the Fed cuts interest rates to 2%, which should be happening when the new Fed head is installed at some point next year. So they don't get the same valuation that the C Corps have because the institutions don't like the tax documentation you have to deal with.
Or you have to do swaps. You have to do a swap in order to own it. Yeah.
So it's a little annoying for them. But if you're looking for solid double-digit yield, on the come, and hopefully a re-rating of the dividend, I can imagine that trading down to 7 to 7.5% on next year's dividend at some point. So this year 2025 was a pause. It just digested the gains it had for the 2 years before that, but it's on track to do exactly what I thought. And I think there's at least a 25% trade in it, a total return
Bob,
for the next year.
Bob, you got any opinion? You got opinion on PAA? You like PAA?
Yeah, I like it. I mean, these names, it's in there with, Williams, Kinder Morgan, Energy Transfer, Enbridge, and then PAA. But like Robert said, some of the hesitation by institutions is just to have the filing the partnership forms for that on a tax basis. So no, but I agree with Robert.
Yep. And then the second name was the one I mentioned a couple of weeks ago when I went all in, Ceragon. Still haven't gotten paid in this one yet. One of my laggards. You can't win them all, Ben. I'd be even more obnoxious than I am if I won them all, right? So you got to have a loser now. Not lost a lot of money, but it's an opportunity cost we're dealing with here. They announced their outlook for 2026. And they detailed a push out of a large order in Q4. So they missed Q4 by $1 million or $2 on an $84 million estimate. That's not the end of the world, and it's old news. It's history. No one gives a rat's ass today about 2025. Stocks are trading on 2026 estimates, and it's 9 months. They'll be trading on 2027 expectations. So they guided to 5 to 15% revenue growth. I think it's 10 to 15%, which is what I can say, well above the average company and the median company in the S&P 500 for revenue growth. So it's a cheap stock. It's $2.15. It's about 4 to 5 times EBITDA on 2026 numbers and 0.5 EV to sales. So I've never not doubled my money at 0.5 EV to sales, including here, because last year the stock went from 2 to 5 and it's down, round trip back to 2 when they had a shitty year. Last year was a disaster for Ceragon. But The outlook is strong. The CEO on the call said, dare I say, we are more aggressive with our internal plans than the outlook he gave. So if a few things break right, they might do a 15% plus revenue growth year, which would be a recovery year. And it's a cyclical growth company. And you want to own cyclical growth companies when the bottom's in, because if you can get a cyclical recovery in 5G capital spending, it would be, you would get, there's 2 or 3 really good reasons why 5G data infrastructure, not voice, data infrastructure should be expanded in the next 2 to 3 years. And if they have this, 15% 3-year growth spurt, which forecasting it, it could be, a 2, 3, 4 bagger from here over the next 2 years. And as you know, Ben, I've had a lot of them in the last 12 to 18 months. Many 2 to 4 baggers.
You've been on fire, brother. You've been on fire. And you've been kind of consistent on this, Aragon. All right.
Consistently wrong so far, but there was a window for a day where we were paid, we had 100% profit. And I didn't take it. I didn't sell a share up 100%. I didn't even think about selling it. That's how, I messed that up. But I just think I was early and not wrong yet. In a year, we'll know. I'll be wrong, or if I'm right, we'll be $4 to $5 in the stock from 2.
Yep. All right, Bob. What else we got today? It's
got a big meeting in Washington D.C.
yesterday for you. Like, considering how we started last Friday, I'd say oil's traded okay this week.
Well, you got a lot going on around the world, and now you've got these uprisings in Iran. They shut off the internet overnight, so there's no internet there, but they're burning government buildings and a lot going on there. So the concern is that oil production or exports from Iran could be interrupted now, on top of Venezuela basically being in a pause. And remember, we came into the week with the biggest short position in the oil futures contract in over a decade, in the smallest net long position in crude oil over a decade. So it doesn't take a lot of geopolitical concern or fear to get the oil price to sort of pop up here with a little bit of short covering on that huge short position we've had in crude oil. So those are the 2 factors really underlying this move back up. We're still just slightly under $60 a barrel, but it's moved up here a bit. So that helped out the energy stocks a lot yesterday, particularly with some rotation out of tech. Today, oil's up. What is it now? It's up a little over $1. It was up $1.50. Energy stocks, they're not doing great, but as far as what I'm doing here, I've got an order out there to write covered calls, March 120 covered calls on half my position in EOG. It's not up to the price I put in there, but as I've mentioned before, I kind of want to lighten up a little bit on my EOG position. It's not among my favorite names, but I still own it. And so I'm looking to maybe write March 120 covered calls if we get a further pop in that name. At the same time, Valero, I'd mentioned prior to the events in Venezuela, I'd been building a position in Valero, largely in the low 170s. So with this pop in the stock, I've sort of paused here. I never got quite to a full position. So I'm just watching it. It's down this morning. I'm watching to see what it pulls back to before continuing to add to try to get to a full position in that name, just given my cost basis is a lot lower than where it is today. But it's going to be interesting to see how this plays out. Trump has really not given any indication as to what he's going to try and push with the oil companies he's meeting with today. And as we talked about on Monday, any company that goes back in Venezuela, they want assurances that they're going to have a contract that protects them beyond this administration. And they want strong measures of security to go back in to Venezuela. Chevron's the only one still there today, but the Exxons and the Conocos and Shells of the world want some reassurance that they're not going to get kicked out again at some point in the future. So we'll sort of see what Trump comes up with today. He hasn't said what he's going to do. Certainly, he's got to give them some guarantees. The one interesting thing is that given the embargo or quarantine on Venezuela, they're sitting on about 50 million barrels of crude oil in inventory, which Trump wants to sort of release and take the revenue and distribute that back to the country somehow. Apparently, he's got an agreement that with their oil revenue, they'll buy only U.S. goods. So if that holds, that's a positive. But there's still uncertainty around, the current regime and the stability in the military and what happens there in Venezuela. So the market's still uncertain as to what that means for oil prices longer term. And as we said on Monday, I think it's at least 2 years before you see any significant increase in Venezuelan oil production, even if oil companies went back in there today and began to repair things and put things back together and try to bump up the production. So we're a long ways away from some of the numbers you've heard thrown out there, 3, 4 million barrels a day. That's way into the future, but a lot going on, a lot to watch. It'll be interesting to see today what comes out of that meeting that the White House is having with the oil companies and see what it takes to get them to go back in and start this investment to turn that production around. And in the meantime, to see how that 50 million barrels sitting there in inventory gets put back into the market. The one thing we do know is Trump wants that oil in the market and he wants energy prices even lower. So he's going to pull out all the stops to try and get this to move forward as quickly as possible. And that's a concern longer term on oil prices. So, in the meantime, we're sort of flirting with $60 a barrel again here. Not selling anything. Still like my CNQ. On the gas names, we've got warm weather. We're supposed to have warm weather near term. And that's the thing that's weighed a little bit or pulled natural gas prices back here. And it's the one thing we said was the risk all along is what is the weather going to be this winter? So, we're keeping an eye on those. I'm not selling anything. Like I said, I'm looking for any further pullback in Valero to maybe continue to build that position and looking the right covered calls on half my position in EOG if that continues to move up here.
Yeah. Roberts Weatherford ideal like last year, and I got into the Schlumberger recently, and it's funny because when's the last time anybody gave a damn about oil services?
Right.
You've been covering oil service long. I mean, like it's been a while, right?
But those stocks have done well in the last 6 months. You've made money on those.
Oh, I understand.
All those.
I mean, like,
Schlumberger, Baker Hughes, Weatherford.
They all got down to 5 times EBITDA, so they all got stupid cheap.
Yeah, they got. I mean, like if you look at like Schlumberger, I think it got down to like 6 or 7 times PE in after Liberation Day, right? So now it's at 14. And I think, it just got a multiple. All these things just got that little bit of multiple re-rating, right? Because as you said, we're not going to see any real cash flows from this stuff in the next 12 months, probably. So you're going to have to try and make some estimate of the out years. And, that's usually a multiple re-rating higher type of thing, which obviously creates risk if nothing's done, obviously. But all right. Well, yeah, look, it feels like it's a little bit of interest in the energy space, getting a little action here for you, Bob. It was very down only and not fun there for a bit, but like it feels like we're gonna have a different year. What?
For a day or two this week. But yeah, and remember, Exxon, Conoco, these companies owe billions of dollars. And you can pretty much bet that at some point they're going to get paid back if Trump is successful with turning everything around there.
Yep. All right, let's call it there.
Ben, I had a question for you. I didn't see your 2026 forecast for the financial markets. Come on, buddy. If I missed it, I apologize. What are you calling for here?
I don't really do forecasts for the year.
Well, you sort of have a template on play out. No, you should. I do.
Yeah, I think that the beginning of the year is going to be okay, and then I think the rest of the year, then they're going to have a point where liquidity is kind of topped out. I mean, if you look at, for example, I was looking at the balance of trade. I wish I would have sent this to Jen. Balance of trade is almost back to even. We're almost back to even. Tariffs doing their job. So we get the tariff announcement here any moment. I don't know. I don't see. I'm not in front of I'm on my laptop. On my normal computer.
By the way, I see the headline: the Supreme Court will not issue a decision on tariffs today.
Okay, there you go. So we'll have to keep waiting. And thank you, Bob. But that's liquidity. That's going to be strong dollar. I think you get a flattener and a strong dollar, and then that will lead to less liquidity. If there's less dollars going out through the trade deficit, that's less dollars that can come back in. If you kind of line up trade deficit with the stock market over time, they kind of line up pretty well. But then again, I think it's going to be one of those things where you got to be in the right spots, right? Like, Trump's coming out talking about huge defense spending, but then can't spend it on buybacks. And last night we had Charlie on my Betting the Squirrel podcast, and we talked about, they're going to give them this capital relief, but will they make them to put that into lending versus buybacks, So there's like all these caveats, I think, going on where I do think liquidity cycles kind of topped out and midterm, have not been good years for a while, and it's a midterm year. And I don't know. I think lower rates will be the dominant feature in the stronger dollar, and that usually leads to weaker. But I think sector by sector is going to be, there's going to be some dispersion basically continuing. Now, I don't think the Russell 2000 is going to keep going up at a 6%. If you annualize this move this week, the first 5 trading days, there's 252 trading days in a year. Buddy, that's a lot of action, don't you think? You don't think the 250?
I'll take it. so you
250%, 250% annualized rate, buddy. I can't see that continuing.
I pay attention to these patterns, the cyclicals and seasonals, and I think you're spot on with first quarter tends to be solid in a midterm year, and then quarters 2 and 3 tend to be very poor. And intra midterm years, there's a good table out. Maybe I'll put it up on Stock Kings that shows the drawdowns, and they're just very large compared to any other year. So if this year plays out, it probably won't, because everyone's paying attention to it more than ever, I think, with all the algorithms and computer trading. But if it does play out according to the historical pattern, you have a good first quarter, then you have a pretty wicked correction in Q2 and 3, and then a decent recovery post the elections in the Q4. That's sort of the typical game plan for a midterm year.
And we'll see.
The difference this year is we got a rate cut coming with the Fed. That's a big change.
Yes. And it won't come until this second quarter, right?
May.
I guess.
May. Yeah.
So the question is, could it discount it, in the first quarter and part of the second quarter, and then could there be a sell the news? Especially, I don't know about you guys, but if the Russell 2000 gets up 10% plus for the year, I'm raising cash intra year. Yeah.
I mean, look, it doesn't have much farther to go.
And it's up 5, I think.
Another 4% to go. Yeah.
Yeah.
Yeah. I mean, we're at 260 on the IWM.
Up a lot more than 4%, 6%. So I have a beta of 4. So yeah.
Banks and tanks and banks, baby. The banks are up 5, the tanks are up 5, and AI has been although some of the names have kind of rallied from their late season roll up. But anyway, yeah, I think tighter liquidity, a little bit of credit issues, stronger dollar, and look, people say whatever they want about Fed cutting rates, but in my mind, that's a deflationary thing. Less income for the people, especially everybody's termed out their fixed liabilities, both the rich households and rich companies. So they actually it's negative for income, and that's something that people don't talk about enough. But I think that's enough for today. We could call it there. Nice little energy discussion. Friday playoffs this weekend, boys. Let's have a fun one. We'll see you guys next week. I'm Ben Fry.
Go Birds.
Packers. And there we go. All right.
Thanks, guys. Bye.
Hey,